Time to move on then, and let's get to a CNBC TV 18 exclusive then. Nalco reported a solid set of numbers in the past quarter. The result was driven by lower power cost and also good operating performance in both their segments, alumina as well as aluminium. To discuss this and more, we have Mr. Sridhar Patra, the CMD of Nalco, who joins us on the show. Hi, Mr. Patra. Good morning and good to speak to you after a very, very long, the analyst community as well is waiting to hear you out. So we are happy to have you on the show. Well, let's talk about the past quarter's performance. It's looking absolutely superb. Blended margins coming at around 23%, the highest we've seen in the last 6-7 quarters. So give us a couple of numbers here. One is on the power cost side, you've saved quite a lot of costs, which is good. Tell us, out of your total coal requirement, how much of it is coming in from captive sources, and how do you see that scale up, and what does it mean in terms of margins?
You see, for our 0.46 million ton of smelter as in existence, almost 67 to 70 lakhs coal is required for production per annum. And we are fortunate, we have ramped up the production of Utkal D and E. And normally any mines which comes for operation 15 to 18 months, but within 6-7 months we could make it operationalized. And we have ramped up the production in the current financial year. We will be producing 2 million ton from our own mines. And the next year we have a plan to make it 4 million tons. And as for the provisions, 25% we can produce more also. So it is a efforts made to maximize our own coal consumption from our captive mines. So this year we have planned 2 million tons. Next year we have planned 4 million tons.
Just to get those numbers out of the way, sir, 6.8 million tons is the requirement. For FY24, you're getting 2 million tons from your captive mines, right?
Yes.
And for the next year, it will be 4 million tons. So that's FY25 itself. So, good amount of captive coal that's coming in there, which obviously helps in a power-intensive sector like aluminium. Give us a few more details. What does this mean on margin outlook? Because prices seem to have bottomed out, both on aluminium as well as alumina. And we're seeing a mild uptick January as well as February. What is the guidance over there and what does it mean in terms of margins?
If you want to speak about the margin, these are the price sensitive. Basically, I will not spell out the exact figures, but I will tell you, if you see the LME price hovering around 2000 to 2100 since last 9 to 10 months. In 22-23, the LME average price was 2520, but in the current 9 months, it is average 2200. And if you analyze quarter to quarter, in the quarter 2, it was around 2155 and quarter 3, it is around 2190. It is marginally increased. And we are quite hopeful that in the quarter 4 of the current fiscal, we will be getting above 2200. So on an average, it will be above 2100. This is my expectation of price for the current fiscal with reference to the aluminium. And so far, alumina is concerned, basically it is 15 to 17% of the LME price. So it ranges between $330 to $370, $380. It is coupled with supply and demand forces. Basically,
Yeah, Mr. Patra, just to come back to that, you said aluminum LME prices, you're expecting it to be above 2100 per ton going ahead. But, recently we've had some issues, right, with respect to the Red Sea conflict, etc. Has that impacted prices in any way?
You see, basically the market-driven forces, we cannot say whether it is impacted or not impacted. If you analyze for the whole year as a one financial year result, then it will have a mixed impact. The input prices increases, again it reduces, and sometimes the LME increases and reduces. So it is a question of whole year data will speak.
All right, Mr. Patra, hi, good morning. Prashant this side. So, two questions. One, so in FY25, over 50% of your coal requirement will be captive, as you said. So that is pretty significant. So generally, I mean, in terms of cost competitiveness, I'm assuming that that's a big boost. If you could just sort of answer that. And second, when do you expect an additional 1 million tons of alumina capacity to come on stream, sir? And what is the capex needed for this?
two things I will tell. The captive coal mines, which you have mined out at present and we are made operational much before the scheduled time, and we are quite hopeful it will give substantially to the bottom line. Because basically the raising cost and versus the price at which we buy, whether it is e-auction or linkage coal, whatever may be, there is a huge price difference. So definitely it will add back and it strengthen to my bottom line. And so far 1 million ton refinery is concerned, we are quite hopeful by 2025-26 mid, it will be capitalized. And the capex investment for this is around 8,000 crores. And the company is confident to fund its resources from its internal accruing. And if required, we will take the loan. But for the time being, we have not availed any loan.
Okay. And what is the cash balance as of now? 3,900 crores?
Yeah.
3,900, right?
Somewhere around that.
Got it. And per ton of coal, how much do you save? You said it's substantially low. How much is it?
You see, 667 rupees we are giving to the MDO for raising the coal. And other taxes and duty put together, it will be much lower than the cost at what I am buying either linkage or bridge linkage.
You want to give us a number, sir? 1,000 rupees, 500 rupees, 1,500 rupees. What could it be?
Exact number I will not be communicating.
We are okay with the range, sir. A range. A rough range, Mr. Patra, if you could give us. Per ton of coal, how much are you saving?
Coal, I told you, we will be using 2 million tons.
That's right, sir. On a per ton basis, how much are you saving? You know, I just want to get a rough number out.
No, those are price sensitive. I cannot pass on how much I
Okay.
save.
Okay, all right. We'll let you go on that one. But, you know, your alumina expansion as well, you've given us a guideline by FY26. So we got that. Mr. Patra, one more question. I need to ask you this because, you know, some part of the street is expecting maybe there could be a divestment of NALCO. Do you want to clear the air? Have you heard anything from Deepam, whether NALCO is on the block or not?
No, I have not received any formal communication, or informally also I have not gathered any information.
So there's no truth over there, right?
Hope so.
You're keeping it open-ended, sir. But you haven't heard from now, so we'll take that. But there are some diversification plans as well. You know, there was that JV that you're a part of with regard to lithium mining as well. So could you tell us what is 8,000 crores is for the alumina expansion? For this diversification plan with regard to some rare minerals, how much of money are you all keeping? And by when do you see some kind of returns coming out of there?
You see, we have various business plans. Now the company has also promoted Kabil and we have signed the agreement with the Argentina government for lithium extractions. And we are also having downstream plans. And we have also business plan for expansion of these smelters. So various diversification business plans are there. And we are also seriously thinking for the merchant mining. So we are trying to explore. If you win in the auction, we'll definitely go for merchant mining, which will add also profit.
But no concrete plans as of now. You're looking at diversification, but that will flow, I guess, in the next 3-4 years or.
If you ask me, basically it is a dynamic situation. Every time the scenario changes. So as such, we have a plan for expansion of this alumina refinery, which is in progress. And the smelter plant also will be expanded. The investment approval has been accorded and land acquisition is under process. So these are two the basic business model. And the intention of this is to support throughout the life of the company to earn profit. So diversification what we will make without compromising with the intent and ethics of the business. Our intention is to provide primary metals to the secondary industries. There are two differences. One is business, one is industry. The businessman will look forward the profit, but as an industry, we want to grow the economy because our secondary industry, whom we have assured raw material securitization, we want they should grow. It is not at the cost of them we want to grow. So we want to contribute to the national economy, not standing alone by NALCO, along with the other tertiary industries.
Okay, all right. Final question, sir. Dividend has been another juicy topic, because you all have been giving out dividend and the shareholders are very happy. What's the dividend policy over there? Will you continue to pay out? I think already this year you paid 1 and 2 rupees.
As a public sector undertaking, we are bound to follow the DIPAM guidelines.
Okay.
And as per the guidelines, 30% of the profit or 5% of the net worth, whichever is higher, is to be paid dividend. And the company has been paying higher than that dividend. And we assure all our investors will not disappoint them.
Okay. All right, Mr. Patra. Always a pleasure speaking to you, sir. Thanks so much for speaking to us here on CNBC TV 18. You give us the outlook in terms of aluminium prices. Coal, nearly around more than 60% will be coming from your captive mines, which will result in saving, clearing in the air that the company is not on the block, and you look to pay out dividends as well. Always a pleasure talking to you, sir. Do speak to us more often. We'll be happy to host you on the show.
Well, Mr. Patra, thank you very much from all of us here. Appreciate you joining in.